All right, let's turn now to the energy market. Obviously, you all know the story yesterday. Oil, WTI settling at negative $37 a barrel. Things that have never happened before. Dan Dicker is the founder of the Energy Word. He joins us now. Dan, I'll just start with what happened, and like, how do you explain this to someone who calls up and says, Dan, I hear you know what's going on in oil. I didn't think it was supposed to be negative.
It's a function of the futures market, Miles, because obviously, it's like going into a delicatessen and asking for a roast beef sandwich, and the deli man gives you a $5 bill as he completes making the sandwich. They're actually paying people to take oil away. It's really a function of the futures market, and I don't know how deep in the weeds we really want to go with that. The point is that basically we have a financial market. I mean, that's what futures are, where people trade money. That's all that they trade. But when the contracts come due, all of a sudden it becomes a physical game. You either have to accept delivery of the stuff or you got to make delivery of the stuff. And right now there's really no place to put any stuff. And that being the case, those that are long the market with 2 days to go in expiration have to sell. They really don't have much of an alternative unless they want to fill their bathtubs. That's all they've got, and that's what can drive markets into negative prices, which are obviously ridiculous, but that's what can do it.
We live in a ridiculous time and age. So, Dan, what happens now? We're going into a new contract. Is this just going to happen to this contract? I mean, what is it? I've heard it be described as just a death march here for the next month. Where do you see this going?
Yeah, I think that's exactly right, Jen, unless something changes inside, the physical marketplace. So you need either demand to ramp up magically, which it probably won't do, or for all of the OPEC plus players and President Trump to toss in another 20 million barrels a day of production cuts, which that probably won't happen. You're looking at a replay of this in 30 days, provided, that there's no magical solution on either the oil side or on the coronavirus side. I mean, that's really what's driving all this, obviously. It's a massive drop in demand. And if you had a magical, solution, whether a clinical one or a vaccine, then you would obviously have a big jump in demand, and that would straighten things out quickly. But other than that, I think you're looking at that death march again next month.
All right, so I guess stepping back then, Dan, just from the price of oil, obviously this matters as an input to a lot of different companies, and I think that the lazy way to say it is, like, doesn't someone benefit from this? But as far as I can tell, the price of oil falling 70%, at least given how 2014-15 played out, that usually doesn't really benefit anybody. It seems like everybody hurts from a drop in the price of the commodity that's that sharp. What happens at the company level here as we try to sift through if it's economical to keep drilling, who's in a position to keep drilling? We've seen some bankruptcies. Presumably, we're going to see more. How do you think, how long, I guess, does that trade play out?
There's a long curve here, Miles, a very long curve with energy companies where you need 300 to 500 bankruptcies before, the supply situation is going to be made right. Now, if you wanted to get even more macro, which I don't mind doing, oil is a tell. I mean, the U.S. oil industry and global oil, in fact, is the most bloated, sclerotic, badly managed capitalist endeavor that this world probably has ever seen over the course of the last 5 years. But it's not the only horrible sector in the world, and that oil should fall off the table and actually go negative, I think, is a sign of what's going on in the economy at large. And that much of the optimism that I see, not only in the stock market, but in a lot of people who are talking about it, about somehow, opening up for business in the course of May is going to turn things around, to reopen an economy. I just don't see that. And I think oil is telling the story that some of the worst effects of coronavirus on the economy may yet come. I mean, I think about automobiles, for example. Let's take it from an oil point of view. I mean, gasoline consumption is down 50% in the last couple of weeks. So, all of a sudden, people don't need their cars as much. And people who had a second car, they want to sell that second car. And if you've got 20% unemployment, on top of that, now you've got a whole bunch of leases, maybe 10 or 15 million leases that have a possibility of default. Now you have a problem with banks who are getting a whole bunch of cars coming back on loans that are going to be unpaid. You've got automakers who need a bailout because they can't sell a car. You've got guys who are working in the auto repair industry who don't have any business. You've got the car washes who are going, I mean, you could just go on and on and on. I mean, and this is only in oil. You could think of like 20 other industries where the knock-on effects of restaurants, hotels, movie theaters, you can just go through it. And unless something magical happens, I think that the optimism that's going around right now about this economy restarting is just a major fantasy.
Dan, you're a professional. You've been in energy for a long
Too
time.
long. Yeah.
Too long. Okay, good. I was just about to say decades, and then
no, I'm an old man, and you can call me an old man. It's okay. I don't get
offended. No. Do you have a word for retail investors here? Because I think some people have gotten a little bit of a shock. People that have gone into these U.S. oil ETFs, including the United States Oil Fund, retail investors that thought, getting into crude is just another thing to have in my portfolio. Should retail investors be playing around in oil?
Well, if they are going to play around in oil, one place where they definitely should not play is in oil ETFs like the USO. It's a horrible, horrible proxy for oil prices. It's an endlessly declining fund number. They take big expenses to get in, and in all ways, you're going to be a loser overall, even if you're right about the direction of oil. So if you must play oil prices, the best way to do it is, the old-fashioned way with futures, like I did for most of my career. But that being, that's difficult for most retail investors. So the quick advice, Jen, is, you're nuts if you play this stuff right now. You should probably stay the heck away.
All right, sound advice maybe in the markets and just in all facets of life, just stay away, stay calm, don't do anything. All right, Dan Dicker, founder of the Energy Word, always good to talk to you. Dan, we will speak with you soon.
Okay, thanks a lot.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.